All right, we're back. Tasty Crypto Show. I'm Ryan Grace. He, of course, is Frank Kaberna. It's August 5th. And crypto's in crash mode, Frank.
Yep. The great crypto crash of August. It's actually, it's tough because the market was open all weekend.
Yeah.
And the big
in
day,
crash mode.
The big crash was really yesterday for crypto. So it's kind of hard to, the futures will say today was the big crash, but the spot market will say yesterday was a big crash. It's not good for the historians. It's tough for the historians.
It's going to be hard to write this book. Bitcoin down about 5% here, $3,391 to 54,727. Obviously, it's whipping around. We traded underneath 50. Spent a little bit of time under there. Some might say running some stops. The range has been 70 to 50, just about. ETH, though, certainly underperforming, down 25% on the week now to just under 2,500, 24.45. Bitcoin Cash 310, Solana 133, and Litecoin, if you care, 56. You don't care.
What? I don't even know what Litecoin is. I know that it's like one of the major. Is it a major cryptocurrency, or like was it a major?
Maybe it was.
Yeah, it was.
Came out right around the same time as Bitcoin.
All right.
That said, it is one of the tokens that you can trade. If you enable cryptocurrency trading on your Tasty Trade account, you can trade it at Tasty Trade. But Frank, let's just jump into it here. We've got a lot to talk about. It's been an exciting day in markets, right across the board. A bit of a correction underway. I don't quite know if we'd call it a crash. We've seen this before, in crypto at least. Stocks went up almost every day, it seems like, for the last couple of months. And over the last couple of weeks, we've seen a bit of a pullback. Clearly, there's some crowded trades. But everyone on Twitter is now an expert in the yen carry trade. So I saw this. One of the guys on the desk shared this with me earlier today. I figured I'd throw it on here because it's funny. But everybody seemingly is an expert now in the yen carry trade.
Which is funny because I technically work for the Forex part of the company.
Yes.
They have me.
Because you're doing everything.
I don't know, but it's one of those things that I don't know if it's because they like me or because I just like can't do anything well. They don't like me.
No, I think they like you, and I think you do everything well. Come on.
Oh, thanks.
That's why we get you on the Tasty Crypto Show.
Constantly at like random projects. Like I'm on the Tasty Crypto Show. I'm not like the smartest crypto guy in the world for sure. Probably not in the top 10 smartest crypto guys.
Doesn't take much.
In the
only
office.
other person on the network doing this is me.
So maybe I am the second smartest crypto guy. But anyways, the carry trade and what has happened in the last 2 or 3 trading sessions, I don't even feel like I'm an expert on. But it was funny because it was like an obvious part of my last couple of days, just because, like I say, I work at the Forex part of the company now. And it's been like a big move and something that we've been talking about. But it was especially funny this morning when people in the office started talking about it, and started reading the headlines of like Bitcoin and the AI stocks. All this stuff is down because the yen carry trade, and it's like, what the hell are we talking about here? It is a part of it.
Well, correct me if I'm wrong, but the yen obviously has had some historic weakness, but as of recently, over the last couple of weeks, has been strengthening quite a bit against the dollar.
Yeah.
We've seen dollar weakness. This isn't something that just started today. There's a lot of other drivers at play, and you've had a lot of crowded trades as well in the equity space,
really
right? Short vol's been a crowded trade. Long Mag 7, AI, just stocks in general. That's been a pretty crowded trade. Correct me if I'm wrong.
Yeah, when you have any I guess dollar yen is a really cool story to look at because you have a really crowded trade at a 40-year extreme, and the dynamics that have pushed it there and kept it there are shifting, albeit very slightly. But when the interest rate story started to flip last week after the non-farm number comes out, and it's like, oh, our unemployment is actually 4.3%, and then traders start to price in, oh man, they're not going to only need to cut 2 or 3 times the rest of the year. they're going to need to cut, 100 to 150 basis points, not just 50 or 75 basis points. Sorry.
Take them negative.
I'm thinking of 25
Take those
basis
rates
points.
negative, Frank.
But then you start to see, oh, okay, that's meaningful for this dollar yen market and a whole bunch of other currency dynamics. And when that stuff has to be unwound, that has triggers all over the place. So it is cool when something like this happens to look deeper into it and learn about the carry trade, learn about the dollar yen dynamics, and learn about how that might be tangentially attached to other markets. Because obviously a lot of firms that maybe have a lot of exposure in that dollar yen carry trade are also having exposure in other markets that at once they're now getting triggered. Oh man, I need to liquidate these positions to help out with these positions over there. It's cool. But to your point, we also have an equity market that has been printing through all-time highs and has been on an unbelievable run for 6 months or so. And that's a crowded trade that a lot of people are over-leveraged in. And so when some of these things start to unwind, it can snowball. But yeah, I love this, all of the big market cap stocks and the AI stocks and the cryptos and everybody looking at the yen carry trade as the culprit.
Well, really quickly, let me get your opinion. When you look at interest rate differentials globally, and then you look at what the Bank of Japan has done here recently, I think hiking rates out of slightly negative territory into slightly positive territory. Not a big move by any means, at least not in terms of the number of basis points. Does it speak to just how much leverage is embedded in this? Is that kind of what's happening here?
I think that is a huge part of it.
Okay.
But also how much, I guess the total answer is yes. It all has to do with the amount of leverage involved. You're talking about a market, Ryan, that the futures and the spot market, pretty much every iteration of this market is margined at 2, 3, 5%.
Okay.
And so it doesn't seem like a lot. And you and I were actually talking off the show, and I was like, it's not actually a lot. Like, if this was a scenario where there was some emergency occurring, some crazy, I don't even know what the set of circumstances would be, that the Bank of Japan,
like a global pandemic.
But not only that, but like Japan for some reason has no pandemic and their economy is actually on steroids.
Oh, I see what you're saying.
You know what I mean? Where like the Bank of Japan is hiking 300 basis points over the course of the next 6 months, and the Fed has to cut to zero. Then you would be like, holy smokes, this thing is going to get smoked. And these people that are in this market and have positions elsewhere, everything is going to get unwound, and there's going to be some huge movement. The Bank of Japan went from negative 10 basis points to positive 25 basis points. The Fed has still not moved rates, but the non-farm payroll number on Friday, in the same week that the Fed didn't move rates again, confirms you guys might be moving a little too slow on this. So they price in not only 50 basis points or 75 basis points lower on the U.S. side. So the U.S., Japan, U.S. projected to come down here. Japan surprisingly kind of comes up here. But now that trade looks a lot different when the U.S. is actually going to come down here. Now, again, it's not like they're shifting places.
Right.
That's absolutely not in the current market on the table. But when you leverage up this movement to now this movement by 20 to 1 to 50 to 1 leverage with huge institutions,
Has implications.
it has huge implications. And so I think it is a leverage story more than anything. But yeah, it has knock-on effects elsewhere. That being said, yeah, you have several markets, Ryan, that have been moving unbelievably higher. You have AI company CEOs saying that there's too much money being poured into AI. Yeah. And so like when you have bubbles like that, it's not necessarily that like, oh, this is the crash, the bubble is bursting, but you're going to get corrections like this. Yeah, I don't think it's funny now. Everybody's talking emergency rate cut. The Fed needs to cut rates like they did during the pandemic. And I, for the life of me, can't find any reasoning or it's not even like the regional bank crisis, right? Where it's like, oh man, this structural problem is occurring in this market sector or anything like that. Maybe that will emerge, but for the time being, I think it's just market dynamics.
Yeah, absolutely. I mean, look, what happened, in my opinion, was very quickly you saw kind of a growth scare, inflation down as well.
Yeah.
So you have a slowdown here that's popped up, maybe against expectations, and you had a lot of leverage built up in markets. Like we will say, everybody's on one side of the boat, or these are very crowded trades. A correction's underway. If I look at the NASDAQ, it's down about 11%. That said, Frank, it's still up about 15% on the year.
Yeah.
After all this is said and done. Let's talk crypto for a second. Crypto's certainly not immune here. Bitcoin, 54.5 right now, down about 20% on the week. ETH underperforming, just about everything underperforming. Bitcoin, maybe no surprise, Bitcoin dominance at yearly, multi-year highs here. We can see that the momentum signals have triggered to the downside. Still keeping an eye on those weeklies. ETH kind of bouncing back and forth. We've got some studies coming that just show you the performance around just using these indicators is simply just exponential moving averages.
Cool.
But getting in or out of positions based on this, I think it's kind of interesting. I try to stay on the right side of the trend. So we'll present that on the show here in the coming weeks. But keeping an eye on the weeklies for now. Dailies, there's a bit of noise, but obviously no surprise that there was some red on the screen. And we are now into negative territory on a 1 month basis when we look at performance. So again, starting to move lower. That said, volatility has increased a little bit, Frank. Here's your expected moves: about $5,000 on Bitcoin off of current prices, and $250 or so in ETH. And then you can see the rest on the screen. Again, though, this is pretty normal, in my opinion. This is within the big range that we've been trading in. We've talked about 70,000 to 50,000. You go back a week from today, we were discussing a Bitcoin strategic reserve and governments around the world just stockpiling this scarce asset. I don't think that this is going to happen, but completely different tone here today. You had new information at 70,000. You didn't push above those prior highs. We're trading back towards the low end of the range. We'll see, does 50 hold or not? I don't think the volatility is necessarily over, but I also don't think that this is the end of the world. That said, I don't want to run out of time, so I want to jump into some of the data that I put together, Frank. And to kick things off, I'm going to quiz you.
Oh, man.
Or just get your thoughts.
Okay.
Your guess. Give me a guess.
This isn't going to dictate,
still going to be friends. Still going to be friends after this.
I'm worried about the friendship
as
thing,
long as I'm not too weird to be your friend.
No, all good.
How many times? We have a 20% weekly move here in Bitcoin. We have the most data. It's been around the longest, so we'll just use Bitcoin here. We'll look at ETH too.
How long has that been?
I think I've got data that when I ran this, I maybe was going back to 2014. Might have been 10 years.
Nice.
I'll have to double check.
Okay.
For you
No, that's. I mean, I was just wondering. Yeah, is this like 5 years? Is it 20 years of data? 10 years? That is a solid amount.
Well, let me give you an actual number. Yeah. So the data that I'm looking at excludes. So I'm really just looking at the last 10 years of data. Okay. So it's certainly going to exclude some of the early days in Bitcoin where you get some crazy moves just given the lower nominal prices. But if we look at the last 10 years, how many times do you think that there's been a move? Doesn't mean that the week stayed there, but you've seen a 20% move either to the upside or the downside within a 1 week period?
Over 10 years.
Over 10 years, yep.
Okay. I'm going to tell you how I get to this number. I feel like I'm back. When I came out of college, I interviewed at a lot of prop trading shops.
Okay. They have much harder questions. They have it's just a guess.
Very hard questions.
There's no wrong answer.
But but they're like trying to see how you think about it. So I'll tell you how I'm thinking about it. Okay. So Bitcoin, 10-year span. Right now, you're showing me a volatility around 60 to 70%.
Yes.
That's probably the lowest volatility that this market has really ever had in the grand scheme of things. And so I'm going to hedge a little bit and say, all right, let's say that the market over the 10-year span had around 100% volatility, or at least closer to it.
Sure. Yeah, we know for sure, obviously, implieds have traded well above 100 and have stayed there. Vols come down over time.
Yeah.
But you've been at much higher volatility levels. We're pretty low. And even today, the volatility rank is 55 when you're trading at 64% implied vol.
And so factoring in 100% volatility. And so that tells you that in a given year that the market could essentially get cut in half or double. making a 20% weekly move, still outside of your normal week, but within like probably 2 standard deviations. And so I would say that all of that factored in, it's probably occurring 3 to 5 times a year. And so I would say that this has happened 40 times.
Okay. I like how you got there. You are unfortunately a little low. So this has happened 220 times. Not so much since inception. I've got to correct that. Wow. So this is going back to 2014.
Wow.
220 times that we've seen a move within a week of 20% or more, right? But you've got to also consider that this is an asset that's been, a few $1,000s to, well, if we go back to 2014, I mean, even less than $1,000 to 60,000, 70,000, right? And so, certainly possible when we look at it from that perspective. 220 times. So it happens a lot more.
220
frequently.
weeks. How many weeks have there been in the last 10 years? I know this is a stupid question. 540 weeks?
So this moves quite a bit, or it has in the past, right? I mean, this is going back to, and I'll show you some more data here in a second that maybe makes this, more digestible on that. A lot of these moves have been concentrated in the earlier days of Bitcoin, or at least in the earlier days of our data
if you
set,
show
right?
the distribution over a timeline, a lot of occurrences here, and only maybe there've been about 4 or 5 occurrences per year the last couple of years.
Yeah.
Okay.
So this is kind of normal in terms of characteristically how Bitcoin trades, right? It's very, very volatile. So 220 times, 20% of 20% down moves, 69 times those up moves, and we've shown this in terms of the skew with vol, the magnitude of returns. Right, there's asymmetry that exists in crypto. Obviously, it can only go to 0.
It started around 0, and it's around 60,000.
Yes,
so it's going to be to the upside.
No surprise here. You have more upside moves that are larger in nature. 69 occurrences where we've seen a 20% move within a weekly time period. ETH, on the other hand, it's about 50-50. 38 times, smaller sample size. But 18 times that we've seen that 20% move to the downside or more. That's the other thing to consider, right? Because that might not have just been 20% in the week. We're measuring it this way, but it could have been a 40% down move when these prices were much lower and something just got smashed. But roughly 50-50 when we look at the distribution from that perspective with ETH. Not so much, more 60% of the time it's up, 30% of the time it's down roughly when we look at the Bitcoin distribution. I want to look only at the downside moves though, because we're clearly talking about a pullback of north of 20% here this week. And so here are those downside moves of 20% or more going back. You can see in 2020 COVID, I mean, massive moves, right? We're talking about a couple times here where this was down 45, 40%. This happens quite frequently. And then we know this is an asset that has gone down 60, 70, 80% in a year to then only go up 500%, 600%, right? It is what it is. So objectively speaking, this does happen quite frequently. If we just look at, where these are from a different view here, I haven't had moves like this in the last couple of years. You haven't had big 20% corrections really since we saw that post-FTX collapse, right? Where your kind of question is Bitcoin dead? Is crypto dead? Is the industry over? We've come back to life and only to go on and hit new all-time highs and to see, ETFs get launched. But you can see that 2018, right? Another year where not surprised to see 17 or so times Bitcoin goes all the way up to 20-some thousand only to correct all the way back down to, I think, eventually finding a floor underneath, 5 or somewhere around 3, somewhere like that. So I thought that was interesting because sometimes there's, these crazy moves. There's a lot of volatility in this market, obviously, and it gets scary. But when you look at this and you kind of put some data around it and try to hopefully provide some context, it's really not out of the norm what we're seeing. It just hasn't happened in a bit, so maybe it catches you off guard at times. And so I wanted to then just look at what typically happens afterwards, right? Sure. Does this present an opportunity at all? And this is not predictive, obviously, just simply looking at what's happened in the past, if we go back over the last 10 years. And so when you get a big move on a weekly basis like this, what happens with forward returns over the next month? And the average return is almost 8%, median return of 3.6%, but it's positive most of the time, right? You definitely have those points where you can go on and you see that follow through, and there's a massive move or continuation of the move to the downside, right? If we look at Bitcoin, it's been 64%. ETH, 87% down.
Yeah.
I mean, that's going out of business numbers, right? But when you look at it holistically, you know, a lot of the time, more often than not, you get a big downside move like this. A month later, you tend to be up. You can't time it perfectly.
No.
And it doesn't make up for the fact that people might have been getting long at 60 and now it's 50, or you're getting long at higher numbers. But when you do see these moves, if you're looking at this from a trading perspective, historically, it's presented a pretty tradable opportunity.
Yeah, and you and I talked about this a little bit. I'm glad to put the numbers behind it because there was a huge sell-off like a month or so ago. Remember, I think it was after Bitcoin and ETH put in some new all-time highs by like a little bit, and then they got smacked, and then they bounced back to the middle of the range. And you and I talked about this concept of you get paid to take risk. And I think this is a prime example of exactly that. And we saw it play out here today. If you're an active trader and you're willing to take risk, when you have a huge move, and this is, you know, a down 20% move that has occurred more than Frank thought it had occurred, but is outside of the normal action. When you get a move that is that big and you're willing to take risk against that move, you, on average, do make some money, because when you're outside of the norm, it's the Wild West, right? And you have people that are, one, either having to liquidate their position insensitive of price and having to go to market, and they got triggered because they only had enough funds to withstand a move in Bitcoin going down to 53K, and then it hit 53K, and they had to liquidate a multi-million-dollar position that, in a relatively liquid market like crypto, still early days, we always say, so much more liquid than obviously stocks and obviously treasuries and Forex, some of the most liquid markets in the world. That's going to make a big move even bigger. And if you're willing to risk the market going even lower in an outside move in a Wild West scenario like that, Ryan, you tend to get paid for taking that risk. Now, there's obviously risk of it going further involved, but this is a classic core tenet of the Tasty Trade, Tasty Live, Tom Sosnoff, the whole thing, which is if the market's down 10% and I sell a put, I'm selling insurance, I'm taking risk here, and on average, I'm going to get paid to take that risk because that person wanted insurance on that day. But how often does a move outside of the norm, Ryan, turn into a, you know, once in a decade full-on market crash? Not very often. Could this be the time? Yeah, absolutely.
We've seen it. You know, we've seen continuations of moves that have been much, much larger.
Yeah.
But, you know, if you're coming in and you're down 5%, you're down 10%, and you have at least some look back like this, you know, I would say that's probably early. We know that it quite often has much bigger moves, right? And we could do the same analysis. And, you know, I'd like the comments in the chat, right, asking, you know, isn't it futile to use stats like this on a young asset? I would say, sure, to some degree. But, you know, just trying to put context around the price action here. If you're down 50%, I might want to know how frequently does it go down 50% like this in a week? Oh, it never happens. Okay, well, what's changed? You know, is there something different that's occurred that's caused the structure to change? Not necessarily. But I think, look, if you have a long-term perspective, which this asset, I couldn't really tell you how to trade it day to day. It's extremely volatile. You know, it's not necessarily going to be correlated with much most of the time. And so short-term, it's tough. But if you have a longer-term time horizon, if you believe that this is some sort of hedge to currency debasement, you like the technology, whatever the narrative is, right? But you just want to be in this asset, then you look at this and you kind of think about, okay, from a just kind of dollar cost average this might be a level where I want to put, a little bit of money to work, but by no means is that a recommendation. There's a lot that's going to go into this. I'm just going to throw up one last chart here that shows the range that we've been in. We'll see if this holds. I think, clearly a break of 50, and this can very quickly go to 40. That would be an interesting level to me for a couple other technical reasons. We can talk about that later. We're going to run out of time here. But, I look at, this range that we've kind of been ping-ponging back and forth within. And, just last week we're at 70. We said, look, it didn't push ahead. You're probably going to go back mid-range. Let's see if we retest the bottom. You're there now for one reason or another, the yen carry trade, whatever it might be. Here might be an opportunity if, it's certainly a better time to get in if you have a long-term perspective than it was just a week ago at 70.
Also, what I would say is that that's a lot of data behind that study. Now, is it thousands of data points over 50 years? No, but I mean, that's a good study that you put together there. And also, if you want to hold out for the most data that confirms your strategy and whatever, the edge is gone. And so, like, what I would say is, great study here. It confirms kind of what we would know. Risk on asset, when it moves huge to the downside, more outside of the norm, it tends to bounce back. I mean, we're seeing NASDAQ as we speak continue a little bit of its bounce back in a very similar way to Bitcoin here as the futures open. And yeah, man, it's interesting, I think, to put that study together over 10 years, so many occurrences, and be a part of this market that is, growing in front of our eyes. And it's really interesting to see that we haven't gotten that many big moves like that in the last
it's been quiet for
year,
a while.
year and a half. Might tell you again that, like, the more data you wait for, the more developed an asset class gets, the less of these moves you're likely going to get. And
it'll be less volatile as it matures.
If you're waiting for, the data to come in or the volatility to come in and whatever, if you're out there trading Amazon or these different markets right now, and you're like, oh man, I wish that these markets swing right now like they swung 10 years ago or 20 years ago. You saw earnings moves of 15, 20% and implied volatilities that were triple what they were. This is what you're getting here,
Well, Frank, we'll leave it at that. Thanks for coming on the show, as always. Thanks, everybody, for tuning in and participating in the chat as well. Always appreciate it.
Yeah.
I've got to plug Victor's show up next. He's got one hell of a guest coming on, Spot Gamma. Big fan myself personally. Ooh. So I would recommend, I can make some recommendations on the show, I suppose. I'd recommend you stay tuned for the Price of Truth with Victor Jones, special guest Spot Gamma. They're going to give you all the levels, talk about a lot of the options dynamics, the hedging, the flow dynamics that exist in the market. Really good stuff, in my opinion. So make sure to stay tuned for that. But that's going to do it for our show. I will be back, Glenn, on Wednesday.
Nice.
And hopefully more data-driven, actionable content
cool
for all of you crypto traders.
I love it, man.
All right, Frank, thanks again. I'll be back Wednesday. Until then, peace.